Let's get to our next guest. Peter Schiff, the CEO of Euro Pacific Capital, joins us now live on the line from Las Vegas. Still with us, our guest host for this hour, Tony Nash from Complete Intelligence. Peter, good to have you with us today. Thank you so much for joining us. What are you making of the US markets at the moment when you look at earnings season? Some fairly rosy forecasts coming out. I suppose if you look at the numbers, 44 forecasts are below expectations, 21 above.
Well, I think we're in an earnings recession in addition to an economic recession. But imagine how much worse earnings would be if the Fed didn't have interest rates close to zero. So this whole thing is artificial, and the stock market right now is caught between earnings going down, but the belief that the Fed will come back in the game with a rate cut or more quantitative easing to lift the market back up.
Tony?
Peter, I'm curious about your rate cut comments. Do you think they'll go back to zero interest rate policy?
Well,
or
certainly.
negative rates?
I mean, they're even talking about, they're talking about even potentially negative rates, or they're thinking about it, and they can't go negative unless they first go to zero. But we were at zero before. Why wouldn't they go back to zero again? I mean, I think we're in a recession, but if we're not already there, we're very close to it. I think the Fed is likely to cut rates to zero than to raise them again.
What's your time horizon for that? Do you think that's going to happen, say, by June or over the summer, or do you think it'll happen later in the year?
Well, the wild part is the election, and the problem is the Federal Reserve doesn't really want to admit the economy is so weak that they have to cut rates back to zero, because President Obama is trying to pretend that we have this great recovery, and Hillary Clinton is running on 4 more years. So for the Fed to basically undercut that message by cutting rates, that puts the Fed in the box, because Janet Yellen is a team player and she knows what team she's on, and Donald Trump has already said he wouldn't reappoint her. So she wants Hillary to win, but the problem is the economy is so weak that she might have to go back to zero to try to artificially stimulate it before November, because the weaker the economy is, the more people are going to be voting Donald Trump.
Just bear with me. You're on the other side of the coin here, Tony, so let's just put that on the table. You actually think the Fed's going to lift rates?
Oh, I don't think they're going to lift it. I think they may have one rate rise this year. We have maybe a 30% probability of a rate rise in June.
Right.
There's a long time between now and June, I think. But there was an employment index that came out today that the Fed looks at that actually had the employment outlook negative. So Janet Yellen, being a labor economist, she's really sensitive to the employment situation. If that employment outlook is negative, I think the chance of a rate rise in June is becoming, increasingly unlikely.
Unlikely. Okay. Peter, let me come back to you. There was something we were talking about in the break. You spoke to our US colleagues a week or so ago, essentially talking about the US debt situation and, Donald Trump's comments about US debt. You said that he's essentially saying America won't be able to pay back their debt if interest rates go up, correct?
Well, that's obvious. I mean, we can't pay our debt. I mean, he mentioned that. I mean, it was an honest comment. He said, what happens if interest rates go up? We can't afford to make the payments. We have an enormous debt, and interest rates are practically zero, and that's the only reason we can afford to service it, is because rates are so low. But even if they go up a little bit, there is no realistic way that the United States can make the payments.
So, Peter, what's your view? I mean, I saw that interview live on CNBC, and it seemed to me that Trump was saying, look, we just need to extend the payback period, and that way we can pay down some of this debt. So Japan has paid back about 16% of their privately held public sector debt last year in 2015. Do you think Trump is going to try to keep interest rates low and extend that period so that the U.S. can start to pay this off a bit?
Well, it's impossible to pay off our debt. Our debt gets bigger and bigger and bigger. There's never been a year where the national debt has shrunk. Even during those years of the surpluses in the Clinton years, the national debt still grew. It never shrank. But Trump was actually talking about a restructuring and negotiation. He said, I'm the king of debt. I know how to reduce debt. He can negotiate, because there is no way to refinance it. I mean, we have no funds to do that. Interest rates are already very low. And if interest rates were to rise, all that short-term debt matures, and, we can't buy it back at a discount. It matures at par. And then how are we going to reissue it at higher rates of interest? We won't be able to afford that.
Yeah, okay. All right, Peter, look, a pleasure to have you with us today. Thank you so much for joining us.